Welcome back to Over the Horizon, a Bitcoin podcast. Today I'm here with Matt Cole, Chairman and CEO of Strive. Matt, thank you so much for taking the time.
Joe, thanks for having me.
Absolutely. So lots of stuff over the last 12 months with you guys over there at Strive. 2025 in particular has been extremely busy. I want to talk about all that. But first, a little bit on your background, how Strive was founded, your personal Bitcoin journey. That would be excellent to frame it up for the audience.
Yeah, so prior to Strive, I actually worked at the largest pension in the United States, CalPERS. They manage about $500 billion of assets, and I was on the fixed income side. So I managed about 70 billion of that $500 billion. Was one of the larger buyers of U.S. Treasuries in the United States, at least, and then also did structured products. And so I'll focus more for this conversation on the Treasury side, even though I think with regards to running a Bitcoin treasury company, some of the structured products and leverage components of CalPERS that I was running actually is more beneficial to running it, but that's less consequential to how I became a Bitcoiner. The Bitcoiner side is the treasury side, where I was buying the debt of the United States government during the era of quantitative easing, money printing, and talking to officials at the Federal Reserve, talking to executives at the United States Treasury, and really just as a fixed income buyer, trying to understand the debt crisis, the rising debt levels, the supply demand dynamics of US Treasuries. And what became very clear was that there was a workaround, but that the United States government was monetizing the debt to the Federal Reserve. And so the basics of that was that direct monetization would be this. The US Treasury issues a new bond and they sell it to the Federal Reserve. If that was happening, the US is explicitly monetizing the debt. And you would talk to these officials and they would swear, like cross their hearts, we are not monetizing the debt. And they say, okay, like, well, can you explain to me what you're doing? I said, well, the Treasury will issue a new bond and, we sell it in the open market, and they would sell it in the open market to a Wall Street bank like Goldman Sachs. Then the Federal Reserve in the open market would buy these new issues from Goldman Sachs. And so basically in the sense of the US government was basically almost like what I would call a form of money laundering, that because the bond goes to Goldman Sachs before it goes to the Federal Reserve, that it's not monetizing the debt, where I would say anybody should be able to see that. Most institutions and even the Wall Street banks, I think because they were the ones buying the bonds, would not explicitly call it, debt monetization, because they were benefiting from collecting that spread, right? Where they would buy it for a cheaper price from the Treasury, then they would sell it at a higher price to the Fed. They'd make some money on it. But that became clearly what was happening. And so you're just looking at the situation, the debt crisis unfolding, zero ability, whether it's a Democrat or Republican, to get the fiscal situation in order. And my hope was that, Doge might be a significant part of the answer, but it became clear extremely quickly that's not. And so to use the Lynn Alden saying, nothing stops the train of the debt crisis that we're facing. And so that means that there needs to be a solution, an off ramp. And I don't even think it's fair or enough to say that Bitcoin is the best answer. I think Bitcoin is the only answer. And so that became my conclusion in late 2016 after years of skepticism around Bitcoin. And there was many reasons for the skepticism coming from an institutional standpoint. And a lot of people had that as part of their journey of initial skepticism. And I think that skepticism is actually good. If you had no skepticism of putting your, life savings into magic internet money, probably, maybe on the curve analogy, that may be like a little bit on the left curve, but, it might still make money. I think some skepticism is healthy, but, when you see it as the only answer, you quickly realize that you need a massive amount of exposure to it. And so that was the most important thing that made me want to move into Bitcoin, was just the return of a savings vehicle that I saw that was a opt out from our net worths being debased. The second was around financial freedom and an opt out from a system that was moving more and more towards control. That wasn't my perception because of the seat of a portfolio manager, but as a citizen of the world, of America, and seeing some of the undertones, the movements towards CBDCs, the reductions of privacy, that I really wanted to have an asset that sat outside that system in my control, and Bitcoin was the best, in my view, the only real answer to that as well. So, anyways, put all my money into Bitcoin. Eventually, at Strive, I think sometimes long-term Bitcoiners struggle with this, where they're like, like the institutions are buying it, the corporations are buying it, the nations are buying it. That's not what Bitcoin was meant to be. My response to that is pretty simple: is that what Bitcoin is it is an asset. Bitcoin does not need the United States to buy it. Bitcoin does not need corporations to buy it. The corporations and the government need Bitcoin because they're screwed. And when you flip it like that and say, guys, this is not a change of the core thesis of Bitcoin. This is actually the proving out that what you've created is truly digital gold that everybody is going to want, that because of its decentralized nature, you can't control who's going to want to buy that. And so I think it's natural that you're seeing a bunch of Bitcoiners like myself, but also like what is true for most other Bitcoin treasury companies that are like, hey, we can actually create one of the most valuable companies in the future during an era of disruption of AI, debasement of fiat currencies by putting a massive war chest of Bitcoin on our balance sheet as our core asset. And I think that's an inevitable thing. And you can't stop it. So you should want it to be done by people that actually, maximally share the values of core Bitcoiners.
That's very, very well said. And that's an interesting journey. And it's interesting you bring up working on a rates desk because my mentor, Nick Bhatia, who kind of pulled me out of college and, I built the Bitcoin layer with him. He too came from a rates background, and that's how he discovered Bitcoin as an asset. Because just like you, he was on the pulse of the system and living through QE and seeing what was happening and all of this window dressing. Oh, we're not directly monetizing the debt, but clearly you are. And now my generation being born into that, right? I'm 24 years old, born in 2001. 55% of Gen Z lives with their parents. It's more than was during the Great Depression. These impacts have rippled. And so Bitcoin exists for individuals to insulate themselves from this, for businesses to insulate themselves from this, for government. So I fully agree with you on that perspective. Many detractors of institutions purchasing Bitcoin, they're what I like to call permanent contrarians. They're contrarians just by design. And it's okay to be skeptical, but I think when you morph into a permanent contrarian, you kind of miss the plot. You miss the point of this asset. And exactly like you said, these institutions and governments purchasing Bitcoin is a validation of Bitcoin's thesis and kind of a tacit recognition that they know they've screwed up. They're unwilling to admit that they've screwed up, but tacitly, implicitly through buying Bitcoin, they're kind of admitting that nothing stops this train per se.
Yeah, exactly. And I had a conversation with Nick maybe a month or two ago. We had a great conversation and we went deep on all these things. So I'm not surprised to hear that, he was, a mentor to you, because seems like a extremely smart guy that has his finger to the pulse on all things going on here. But yeah, no, I think it's exactly that. And my view is, I don't look to be a contrarian to be a contrarian.
Mm.
I look to be a free-minded, high agency, principled thinker, and I'm willing to do anything contrarian or be the consensus. Like I'm agnostic to being contrarian or consensus, but I'm very mindful to be principled with agency and how I think. And I think that's the right way. And it's not to say that you're going to have the exact same opinion as me taking that same framework, right? Like we're going to have difference of views because of our backgrounds and our knowledge, and we learn from each other, right? And we sharpen our, iron sharpens iron in this space. And I can't tell you how many times that people have given interesting perspectives that you then think about, and most often, you probably don't adopt them, but then they do shape how you sharpen that pencil and debate things. And so I think, like, just as an example, when Strive started not as a Bitcoin company, but actually as a company founded on capitalism and meritocracy and things and what is the purpose of a for-profit corporation to make money, that those were foundational beliefs that were contrarian in 2022, massively contrarian, and the rise of the ESG and the DEI movement. And I think at this point, they're more of the consensus mindset in the United States. There's been a massive shift. And so we're not shifting our foundation. Our foundation is stable. It's never changing, right? But now I would say we are part of more of the consensus on that. And with Bitcoin, if Bitcoin gets adopted as currency and the capital gains impediments in the United States are relaxed, and you can actually it has the ability to function as perfect money today. but there's controls in the United States and elsewhere in the world that make it difficult to actually functionally use it as money. If every time you spend it, you have to report capital gains or capital losses, that becomes onerous to actually use it as money. But if those things are reduced and people actually start using it, and everybody love Bitcoin, I say that's great. Just like, as even personal level as a Christian, if everyone was a Christian, if that was a core belief, I would say that's great. But my beliefs aren't shaped on being contrarian. I think you got to be contrarian. You got to be right. And if you're contrarian and right, that's when you can make a lot of money. But the point isn't to be contrarian; it's to actually be principled.
Absolutely. Yeah. And, speaking of being a contrarian, not only does owning Bitcoin make you a contrarian? A fraction of a percentage of US adults own Bitcoin or know exactly what it is. But also, your strategy with Strive has been amazing to watch as you pursued this public market strategy. I want to discuss, and this is, switching gears pretty heavily here. I want to discuss the acquisition of Semler. To this point in the market has really rewarded buying Bitcoin and then doing nothing else, essentially, just using your access to capital markets to acquire Bitcoin and nothing else. But being at the Treasury's conference, one thing that I had spoken to a lot of people about was that it seemed that the gears were kind of shifting toward things like M&A, toward other strategies. The market kind of punished Metaplanet earlier this year when they announced, at least softly, their intention to begin pursuing other acquisitions, right? Using their massive Bitcoin balance sheet or just their ability to raise in capital markets. So how do you think through this acquisition of Semler Scientific as a contrarian investor, as a contrarian CEO, someone who can see out into the future and where everything is headed? Kind of walk us through your thought process there and what this means for Strive.
Yeah, so I guess this gets into the foundational framing of what are we trying to do, and
Mhm.
what do I think that Bitcoin treasury companies should be trying to do, and then you build on that to say what is the best way to accomplish the thing that we're trying to do.
Mhm.
And so the thing that we're trying to do in the short term is increase Bitcoin per share. And to the extent we have any liabilities, right now, Strive has zero debt. We've publicly stated ambitions to launch a perpetual preferred equity instrument in 2025. So obviously the goal is not to have no leverage. I think leverage is actually essential to part of the first goal of, growing Bitcoin per share. But in the short term, grow Bitcoin per share, meet all of our debt liabilities to the extent we have them. In the long run, outperform Bitcoin. And then because we're, a public equity, also be a top performer in public equity space. Because many of our investors, like as an example, Vanguard, they're public equity investors. So it's and I think that Bitcoin itself will likely outperform the S&P 500. So that kind of accomplishes that goal. But those are the goals of our company. It's really, the concept that it's how do you define to a management team that Bitcoin is the hurdle rate, right? You hear us say that and popularize that, have the hurdle rate podcast, but how do you draw that down into an actionable deliverable to then give a management team agency, hire a great team, give them agency to execute on that goal, right? And so I think that it is too constraining to in any way force one or two objectives as the only way to do those two things. So if the only way to do those two things are to issue new common equity shares through the ATM and only to do leverage, I think that that strategy can work out. It could actually outperform Bitcoin mainly through the leverage side. I think the common equity side will be fine in bull markets and it will come and go, but you need to think outside the box. And so, this, you know, opportunity with Semler, as it presented itself, I viewed it as a massive win-win for both sides to accomplish those goals that I laid out. Specifically, what do I mean? Well, if part of the core of the strategy is for us, it's going to be perpetual preferred equity. Well, then the larger the starting Bitcoin stack is, raising it to a size of certain scale ultimately will lower the cost of capital. And so, if you look as an example at Semler, their business was operated as being valued at an MNAV less than one, so less than their Bitcoin holdings, and they had an operating business, right? And so they were, in a sense, kind of in a stuck position. We obviously have had a positive MNAV, but I think when you combine those Bitcoin to be at 10.9 thousand Bitcoin combined, which was the pro forma that we announced, that then starts to become more interesting to institutions. So I'll give you an example. Capital Group, who has been a big buyer of, Bitcoin treasury company. I think they're maybe the largest holder of Metaplanet right now.
Mhm.
The largest portfolio, the one that Mark Casey runs, it has a minimum AUM of like 5, $6 billion, if not AUM, market cap. So if the market cap is not $5 or $6 billion, they can't even consider to buy to allocate to a sector, a company that they want to. So scale opens up large buyers. And so there's a game of scale that gets this flywheel going of accretion of Bitcoin per share that you have to, it's not a perpetual game of scale. Like once you've achieved, call it like the $5, $10 billion market cap, you're probably available for almost any institution to buy, but there's a race to get to that space. And there's a race in the form of a digital gold rush that I think is existing. And it's not easy to get to a market cap of $5 to $6 billion. That's not an easy thing, right? So you have to kind of build the ship, build a team, and M&A can be helpful in this space. Like I don't think that you're going to see Bitcoin treasury companies that have 200 Bitcoin be able to access the preferred market to the extent that larger ones will, or at the same cost of capital. So scale matters. So bringing us two companies together helps achieve scale. On the operating business on Semler, I think this is still less understood, and I'm hammering this more and more, but their operating business was valued at less, like basically a negative number by the market. It's been historically profitable, and it actually hits a important kind of hot segment of the market of preventative healthcare in the United States around the MAHA movement. And Strive's co-founder, Vivek Ramaswamy, is a biotech medical sector investor and business builder. And I think that combined, not myself, but the people around Strive, from Vivek to one of our board members, Ovik Roy, to Ben Pham, our CFO, can give that a broader mission and mandate and then help monetize that to the benefit of both shareholders in a way that I think that Semler would struggle to do on their own, just given the people around the hoop at Strive. And so I think that's an additional way to unlock value as a combined company. And so I really believe that the two companies are stronger together, and that this M&A makes a lot of sense. Now, will A always make sense in the space? Maybe not. Like maybe if we were a $10 billion company, maybe at that point we've outgrown M&A. Maybe not. We'll have to see when we get there. But I think at this space, as companies are kind of building the plane, strategy itself is building as they go, right? They're issuing all these new novel preferred equity instruments. They were doing converts. Now they're doing preferreds. All these companies are so new and so novel that we're all obviously figuring it out. And what I feel strongly on is that super strong teams that are able to achieve scale are going to be the long run winners. And so I think that's why this M&A activity with Semler and Strive made a lot of sense for both companies.
Well said. You have a very deep understanding of the game that's being played, right? Pierre Rochard wrote a wonderful piece in 2014 called, the speculative attack, right? Now, obviously, the carry trade has been around for decades and decades. The most popular FX carry trade being the yen into the US dollar capital markets. And, in a way, the exact same trade is being performed here. And so ultimately, the trade being short USD, long BTC, the funding side of that equation is what matters most, getting that lower cost of capital. And when you're talking about a public company, scale is how you achieve that. So you seem to understand that extremely deeply. And that's fantastic from an investor's perspective. For anybody listening, I want to ask specifically about that leverage. I think you did a show, I'm not sure what conference it was at, but I think it was with the Bitcoin economy. And you were speaking about convertible notes or convertible debt generally versus preferred equities. For you, how can you explain sort of your preference between the two when it comes to which is the more opportune lever to pull as far as raising capital to fund Bitcoin purchases?
Yep. So I'm gonna give you an answer that's gonna point heavily towards perpetual preferred equity as my answer, but I'll just say that I do think that different investors have different desires for risk and return, and so I do think that some will like the exposure that a convertible note might give to them. That's just not what I think I'm most interested in investing in or also building. And so the ultimate answer from my perspective is liability asset matching. And so you take Bitcoin, it has no cash flows. It's about as infinite of a duration of an asset that you possibly could find. And so if you're trying to do a carry trade with the asset being one of infinite duration, you would naturally want the liability to have the longest duration possible.
Mm.
That is the best pairing of a carry trade that you could do. Anything that moves where that breaks, it's a less ideal version of the carry trade. And so why I think the perpetual preferred equities are so interesting is that you never have to prepay the principal. You just have to manage the interest liabilities. And so if the interest payment, as an example, is 10% per year, your liability is 10% per year. You're not sitting here looking at a cliff in 3 years or 4 years or 5 years. Strategy was laddering their maturities. The reality is, for smaller Bitcoin treasury companies, they're probably only at the scale where they can get one convertible note. So they literally will have a bullet where all of their liabilities are due 1 year in the future. And it doesn't matter if that year is 2028, 2029, 2030. They're sitting at a point in the future that if we enter into a Bitcoin bear market, and I mean, I'm as big of a Bitcoin bull as anyone. I think that there's a strong case for a super cycle and kind of movement up more, in a more sustained, with less downside risk for the next several years. But that's a thesis. And that thesis could be wrong. And you don't want to have a non-ideal form of leverage slap your company in the face at the worst time.
Yeah.
And so the perpetual preferred equity is the best way to match the asset and liability. So that's what we're trying to do. And then I guess the second point I'll make is that, the returns of Bitcoin are extremely positively skewed to the upside, where there's massive days and months of extreme upward volatility, right? The green candles that just pop out of nowhere, right? And you don't want to you want to do the best you can to retain leverage in those scenarios. And the convertible notes can actually convert to equity. And so they actually become equitized at that time to the upside. So then you actually completely lose your leverage. And then to the downside, they become a maturity. So they have like a negative convexity attached to Bitcoin around them that I'm not a big fan of. On the preferred equity, I mean, when the common equity goes up and Bitcoin's going up, your leverage ratio will go down. So you have to try to, think if you want to maintain that through additional issuance as a preferred equity, but it doesn't go away. And so I think it's the best form of leverage that you could find in the space to ultimately put this carry trade on that we're talking about.
Very well said. Very well said. Duration mismatches can be not ideal, particularly when you're operating at scale. So I love that answer. I want to ask you about alpha versus beta strategies. You mentioned earlier Bitcoin is the hurdle rate. I think that's something I'd love to dive into. Our listeners really like that. So Bitcoin being the hurdle rate, how do you outperform BTC? And how do you balance both those alpha and beta strategies in order to get there?
Yes. So this is about looking across the opportunity sets and making the best decisions we can. And so when we first announced our strategy at Strive at Strategy World, we announced alpha strategies as kind of like the thing that we thought was the best way for us to outperform Bitcoin and differentiate ourselves. And the reason at the time that that was the clear answer in our view is that we were not fans of the convertible notes. So we were, talking to pipe investors, and we were getting term sheets on the convertible notes, and we didn't like those terms. And so we passed on those. And I think we're the only large Bitcoin treasury company that passed on all those and has a clean balance sheet right now. But then we saw, a handful of alpha opportunities as ways to meet our short-term objective of increasing Bitcoin per share. And so again, the objective is not to deploy alpha strategies, is to increase Bitcoin per share the best way we can. And so anyways, those were decisions we made in May. And then it became clear shortly thereafter that we were the leader, if not the only company that could lead in regards to getting a really attractive leverage profile to perpetual preferred equities that no one else could do, and ultimately meet that objective if the carry trade works as we think it will, to increase Bitcoin per share. So the beta side actually became a larger differentiator than we initially realized. And so it wasn't that like alpha strategies kind of remained at like the same level of execution. The beta side to perpetual preferred equity shot up above the alpha side as like the clear focal point for us to drive value to our common equity shareholders. And so that's why we've been messaging that, because that opportunity came up in a way that the space moves so quickly. And then as we put that in place, we're always going to be focused on increasing Bitcoin per share. So that to the extent that we can put in place things that we think are attractive, risk return ways to increase Bitcoin per share, we'll do that. And we do think that over time, alpha will be an important part of that. But it's never, the goal isn't to produce alpha returns or produce beta returns, but to increase Bitcoin per share to outperform Bitcoin over the long run. And to use our collective team to look across any opportunity to do that. And I do, like I said, I do think that over time, alpha will be a core part of that.
Wonderful. Speaking of team, you have put together a fantastic team of pretty good operators in the space, of a great track record. When it comes to the hiring process, when it comes to finding people that will help you achieve this objective of increasing Bitcoin per share over the long run being a really key component there. What are the things that you look for?
Number one, high agency. I think to get back to the point on contrarianism, people that aren't just looking to be contrarian, also people that aren't just only looking at the consensus. So, things that would be, negative would just be only looking at what strategy is done and basically copy paste strategy. That would be just too consensus minded, not with high agency to be able to operate in the space. The opposite would be, contrarian for contrarian's sake, that corporations are bad, or anything else, which you get some of that too. Both of those I think are opposite ends of the spectrum of things that we're not looking for, but high agency people that are, I would say, not just like agreeable, but are also like good people that are hard workers and willing to debate and actually form a viewpoint that we then go and execute. So, we debate things pretty rigorously, in our conversations, but then once we come to an agreement on the best way, drive success for the company, we coalesce around that and we push that to success. The mindset of you can just make things happen, I think, is really true in this space. And so, there becomes a point where you can debate things to death at actually the expense of the company. And so ultimately we debate, we define, with from different perspectives, and then we come around to a decision, and then we go execute and we go make it successful.
Excellent. Debate internally, clearly define goals, and then execute quickly. That's fantastic. Um, speaking of general contrarianism, I wanna ask you about looking forward in the industry, and then we'll bring it back. There has been discussion. I had a discussion with a couple of people at the Treasury conference beyond the types of vehicles that you can issue using your public strategy. The importance of having either one or many underlying operating businesses as well. What's your view on Bitcoin accretion through an underlying operating business? Like, do you view, either over the next 6 to 12 months or in the future at some point, um, that the market will really weigh heavily on whether or not this treasury strategy is accompanied by a high free cash flow, low capex business to increase Bitcoin accretion? Or do you think the market right now just isn't ready for something like that, and they're solely focused on the team of operators who are tapping financial markets and creating these instruments?
At this point, in the early days of a digital gold rush, I think it's on execution and the ability to grow Bitcoin and Bitcoin per share the quickest. I think over time, the companies that achieve scale, likely the answer will be whether the operating business has a small loss or a small gain. It'll likely be pretty immaterial relative to any earnings, gains, or loss from the Bitcoin holdings and the Bitcoin strategy themselves. And so the way I like to look at it is this: if you were these are operating companies executing a Bitcoin treasury strategy. But if you were to put an analogy of what do hedge funds look like? Hedge funds that provide interesting risk adjusted return exposure to a certain market charge a fee. 2 and 20, maybe if you're lucky down to 1 and 10, but like somewhere in that range is the fee to produce a risk return profile that people want. And so if the fee, the quote unquote fee from the operating business, the team to execute that is substantially less than a hedge fund, but you're getting hedge fund like return exposure with better leverage profiles that are not accessible to funds or individuals. Sign me up for that all day. And so I think that is the answer, that you want a team focused on executing the Bitcoin strategy through a digital gold rush. And if they're focused on, minimizing the fee by, a few basis points here or there through the operating business, that's likely at the expense of the accumulation of Bitcoin. And so I view the Bitcoin treasury companies that I would be most interested in investing in are the ones that are most likely to behave like amplified Bitcoin exposure. That Bitcoin is a hurdle rate. And so if you take a massively profitable operating business, my view in almost every scenario is that it does not beat the Bitcoin hurdle rate. And if it was monetized and then the running of the treasury strategy was more through the lens of a fee mindset, that you would actually likely have a better outperformance of Bitcoin over the long run than keeping the operating business. And so I think you can almost view it's not completely the same analogy, but like in fund space, covered call strategies produce income. But if you look at any fund, like an S&P 500 fund that does a covered call strategy, it underperforms the total return of the S&P 500
Yeah.
because it does not beat the hurdle rate of the S&P 500 in that analogy. And I think the operating business analogy will also fail on the same metric. Now, that said, certain investors love covered call strategies. I think certain investors are going to love the income component of an operating business. And so it's not to say that that's not right for anyone.
Mhm.
I just think it's not going to be the fastest horse in regards to maximally outperforming Bitcoin through the carry trade. I think the operating business will more likely weigh it down than if it was just monetized.
Yeah. Yeah, I agree with you on that component. Ultimately, what it boils down to is Bitcoin is a hurdle, right? Right. Whether or not you can outperform BTC. I want to kind of zoom out and talk to our listeners directly. Um, many of them have been relatively new on their Bitcoin journey. Many of them may be pretty deep down the road. How can they think about Bitcoin treasury companies in the broader ecosystem, right? Ultimately, we've seen kind of the evolution of allocations move from primarily retail driven folks to the launch of the ETFs in 2024, strategy kind of being the outsider, the very early player. Now you see this massive wave of new vehicles that have been created, new companies popping up left, right, and center. So how can listeners think about this ecosystem and what should they be looking for more than anything else
Mhm.
when they're thinking about obviously not investment advice, right? But how can they develop a mental framework around Bitcoin treasury companies and how they fit in the broader ecosystem?
Yeah, so I think the only way, in my view, to invest in a Bitcoin treasury company or companies will be taking a long-term time horizon perspective. That I think the misconception of some is that Bitcoin treasury companies are a get rich quick investment vehicle,
Hmm.
where they're actually structurally being designed to take long term to a perpetual nature long term carry trades. And you think about that and you say within a publicly traded vehicle. And so typically when those sorts of trades that would be put on carry trades in institutional investment landscapes or the liquidity profile of them would be very illiquid. The marks of them would likely not be daily, but quarterly or monthly. And so the volatility of these types of investments would be, in a sense, hidden. And I think that actually having the transparency in that is actually a feature, not a bug, but it's a new thing. And so that new feature of seeing the volatility and the market dynamics and the sentiment in the markets of something that's designed to be amplified Bitcoin to with a goal of outperforming Bitcoin over the long run, and you're seeing that daily, that certain individuals are going to struggle to handle that volatility. And my view is that that volatility is a blessing to be harvested over the long run, but when your time frame compresses, it's a recipe for disaster. And I think that that's where you get certain people that could get very frustrated when, as an example, right now, I think there's a mini bear market in Bitcoin treasury land where strategy itself is made all-time lows in 2025 at least versus Bitcoin, but yet if you zoom out since they started the Bitcoin treasury strategy, they've outperformed Bitcoin massively. That short-term mindset can weigh on people. And so I think, how do you get around that? One is education. Two is proper sizing for your portfolio. And if the volatility is something that is causing a lot of angst and even the desire to, if you bought a position and to sell it right now, that probably means that the size was too large for your portfolio and your risk tolerance as an individual. So I think that's a learning that people that are new to Bitcoin tend to go through. And I think for most people that are new to Bitcoin, when they first allocate, that volatility is something that can cause pains in your stomach. That after you've gone through it a million times, like I have and many others have, at this point, I sleep so well when I know that my net worth is backed by Bitcoin. And as a company, I sleep well knowing that our net worth is backed by Bitcoin as a company, and that as we issue leverage, it's the longest form leverage that you possibly can imagine. Like that allows us to zoom out, to tell the story, and to remain calm when others aren't. And I think that's how you outperform over the long run. And it's the only way I think to do this.
Absolutely. Yeah, no, I tend to think that people could sleep a lot easier if they understood Bitcoin treasury companies in the exact same way that they understand Bitcoin, right? People do not buy. In fact, the main way people get burned in Bitcoin specifically is buying it and then with the intention of trading it, right? I know for one, when I was, learning about Bitcoin 17, 18, hadn't gone to college yet, trading it was a really good way to get burned. I was kind of coming up in that whole Robinhood era where it was brand new and anybody could invest on their phone. And, the stories of people getting burned, I think that low time preference that everybody has adopted for BTC, if they simply took a look at these treasury companies, they understood that, these companies, these entities are going levered long Bitcoin with the intention of never selling them, with the intention of, to their best ability, matching their liabilities with their assets to go levered long Bitcoin. I think they would sleep a lot sounder at night, understanding not just the duration, but also the sizing, exactly as you said. I think far too many people, the detractors specifically, may have been getting bored by Bitcoin and this prospect of something that's brand new and shiny to, be a lot more exciting in the near term, when in reality, it's a long-term play in the exact same way that Bitcoin is a long-term play. So very, very well said. One of the main topics of discussion that that's kind of circulating, as you call it in Bitcoin treasury land, like going through this mini bear market, is this topic of oversaturation. I wouldn't necessarily call it oversaturation, but that's a word some people use. You have a great deal of fair weather players who are sort of entering the space seemingly at random, right? With no underlying plan other than essentially being an ATM machine, right? Selling the common and purchasing Bitcoin. And while that's not necessarily a bad thing, I think many serious allocators to this space, are able to distinguish between who's here for the long term, who has a great plan, and who doesn't. But I think for many on the retail side, they tend to get discouraged and kind of view these things as an outright scam. At least that's what they may call it. So how do you distinguish between, how do you kind of view the current state of the market, right? Between sort of these fair weather players and these people who have a team and a plan and a method of doing this and a method of sort of financializing Bitcoin and bringing it to the market.
Yeah, so I am not aware of any. I'm sure I probably, if I went down far enough, that I might say move towards the direction of a scam. But I think that the right question that I think is interesting is a company that's deploying a Bitcoin strategy, are they actually creating amplified Bitcoin exposure, which is what Strive's trying to do, what Strategy is trying to do, and put in place structural carry trades, alpha strategies, whatever it might be, to outperform Bitcoin over the long run, which I think is the most interesting investment thesis? Or are they just putting Bitcoin on the balance sheet? And I think that whether you're an individual or a corporation, I don't think it's a bad decision to say we are going to just put Bitcoin on the balance sheet, as we think that's the best way for us to maximize the long run total return of our company. Will they outperform Bitcoin itself? Maybe not. But will they increase the total returns of their company versus if they didn't do it? Say likely. I mean, they just put the best asset that I've ever seen on the balance sheet in a major way, and they can just sit there and do nothing. And that may make for a something that I personally would not invest in. But I don't think that a company that did that, if they did it how I described, would be at risk of blowing up. And I would say, as AI is disrupting industry after industry, might still be an extremely prudent decision, although not differentiated, likely not to be really provide amplified Bitcoin exposure, but you've de-risked, potentially an operating business that may have little to no future value with a strong balance sheet, and you become a balance sheet company that you could figure out what to do with it on the back end. And maybe for a Bitcoiner, that's not an interesting investment thesis, but for a company, do I think that could be a sound decision? Absolutely. I mean, that really kind of even comes down to a lot of what I talk about when I go talk at, different Bitcoin for Corporations Day for corporations that are considering putting Bitcoin on the balance sheet. I think it's going to be hard for many companies to compete with the Strategies or the Metaplanets or the Strives of the world to get that sort of scale, that sort of institutional access to capital. That is not an easy thing to do. But I mean, would you tell an individual, not a company, but an individual, that it's a bad idea to buy Bitcoin? No. Would I tell a company that it's a bad idea to put Bitcoin on their balance sheet? No. I think it's an extremely powerful thing and a liberating thing that can drive better returns for them, but it's just a different narrative. And I think where the retail community gets confused, and even how some of the messaging of some of the smaller Bitcoin treasury companies maybe is confusing, is that they are not strategy, but they also might not be making a mistake either.
Very well said. Thinking in terms of balance sheet strength above all else, it's a lesson that any company, whether public or private, can understand and individuals understand, right? And that's why we all allocate to Bitcoin in the first place. I'd be remiss if I didn't ask you about the current macro backdrop. Obviously your Twitter handle is Cole Macro, and you were on a rates desk, and Nick and I love chopping it up about what the Fed is doing, how markets are reacting, et cetera. So what's, I suppose, kind of a total departure from the topic, but your 30,000-foot view on the current macro backdrop in the United States. Gold is raging. I think it's hit 50 something different all-time highs at different points throughout this year. So completely insane. Clearly it's sniffing out something. The Fed is cutting into a relatively robust economy. How do you view all of this in totality, and how does it kind of influence the way that you think about Bitcoin?
Yeah, so there's a lot there, but the high level is that I think that there will be downward pressure on short term rates, and I think they'll probably filter into long term rates as well, around a thesis that AI is deflationary for corporations. It's going to drive down their costs. So inflation will be more constrained than what a thesis might be without AI when you look at the debt crisis in the country. So I think those are two competing narratives on inflation itself. And then the job market, I think, is going to be very weak. I think you're going to have a scenario where the job market remains weak, but corporations may not be as weak as you would think historically looking at weak job markets because they're replacing people with machines. So that's and I think there's also a limit to the supply of AI. There's more demand for AI than there is supply, and it's going to take a handful of years to get the infrastructure in place to actually have the supply to meet the demand. And so there's like an insatiable demand for AI, and people are trying to use it in its best instance today, but ultimately it does constrain hiring. Like I'll say as an example for Strive, we're a small company, but if AI did not exist, we would need to hire substantially more people than we need to hire because of AI. And so for us, it's not something where it's like we're having to do job reductions or layoffs because of AI, but for large companies, that is in place. And so with that as a backstop for a global economy, what does that mean? I think it means likely downward pressure for rates. I think it's a scenario where you're likely to see actually asset prices supported because I think the corporations are actually going to be doing some things that are going to improve margins, global easing of monetary cycles, and then the US government I think is doing everything they can to weaken the US dollar. Trump stated that explicitly as a goal of his. And so from a charting perspective, you look at DXY and it's broken down some major levels, but there's a fundamental story that backs that. I put out some charts over the weekend. I like to view things from a mosaic perspective, where I think charts can tell a story that, if backed with a fundamental story, that's powerful. If a chart is telling you something that's disconnected from the fundamental story that's not powerful, or vice versa, I think the most powerful story is when the things are in alignment with each other. What I think we're seeing in alignment with each other is a multi-year. So this is not a call that the dollar needs to drop over the next 3 months. I have no idea, but a multi-year bear market in the dollar. And historically, Bitcoin has done really well with dollar weakness. But we actually, in my view, have never seen the potential weakness in Bitcoin's history of the dollar that we're seeing right now. And so that gets into super cycle narratives that if the dollar has potentially substantial downward movement from here over the next 10 years, let's just say, obviously not down only, but moves down substantially in the next 10 years, that is something that Bitcoin's never witnessed before and will be a positive tailwind to Bitcoin's price. I think that, when you look at Bitcoin sentiment, Bitcoin markets, Bitcoin has been kind of in this 100K range plus or minus for about almost a year now, right after the election of Trump. Gold is ripped, to your point. So I think the sentiment in Bitcoin, which then filters down to Bitcoin treasuries companies, is muted, and it's non-euphoric because Bitcoin has not broken out into a new all-time high versus gold since before 2021.
Mhm.
And so with that, what do you need for euphoria to return to Bitcoin? I think it's ultimately breaking out to new all-time highs versus gold. And if and when you see that, and I do think you do see that in the next, call it, just to be very conservative, less than 2 years, but probably less than 18 months, when that breaks out, it could be this fourth quarter. I have no idea. I'm not good on the short-term calling markets, but once it breaks out, I think you start to see euphoria return to Bitcoin. And then there's massive demand for amplified Bitcoin. And so that will filter into Bitcoin Treasury companies. And I think that they'll do really, really well in that example. And I want to make sure that Strive is building a vehicle that is designed to do really well in that scenario. And then it'll all play out exactly how, we're trying to build it as a long term strategy. But I think sometimes, people on Twitter, they become impatient and they see this mini bear market in Bitcoin treasury companies as Bitcoin hasn't even broken out to new all-time highs versus gold. And I think that if that's your mindset, that short termism, that you're executing or exiting long-term trades at this point, maybe that's the right decision, but I would only say it's the right decision if this type of a trade is not for you. Because if it is for you, this is the time that you would actually want to be moving out the risk curve into Bitcoin and further out into amplified Bitcoin risk, not the opposite. I think that's how value investor mindset that is willing to underwrite Bitcoin risk would be thinking in the current environment.
Extremely well said. Extremely well said. Because not only do you have obviously rates coming in, people naturally move out on the risk curve as a result of that, but that's also happening amidst a rapid, I wouldn't call it a de-dollarization necessarily, but at the very least, you're taking a look at a president who's talking about wanting to create secular weakness in the dollar amidst a backdrop since Liberation Day of the acceleration of foreign central banks holding fewer and fewer and fewer treasuries, allowing them to mature and not re-upping. Russia, prime example, they already hold basically none. If you take a look at the terminal, China has been divesting pretty heavily. And at the exact same time, I think this was also a chart that you reposted, foreign central bank gold holdings have risen. And so not only are we, moving out on the risk curve, but at the same time, amidst this backdrop of de-dollarization. And then if you zoom out even further, right, talking, 30, 40, maybe 50-year cycle, Bitcoin is still going through this monetization phase. And this is my mental framework on how it's going to operate. It's Nick's mental framework as well. I'd like to get kind of your take on this. Is that, over time, as Bitcoin kind of approaches gold's market cap, as it reaches gold parity, what I called back in 2022, what Nick said as well, was that it would trade even more, even closer to the S&P 500, to the NASDAQ before it started getting away from it, right? And so people see gold ripping. They're saying, why on earth isn't Bitcoin directly following it? If you take a look at the 30-day rolling correlation between Bitcoin and any given major stock index, whether it's the S&P, the NASDAQ, the Russell, it has risen, right? It's risen closer to one over the last roughly year and a half, almost 2 years. And I tend to think that, this 30, 40, 50-year process, this third backdrop that Bitcoin is up against, is that it's going to trade more risk on before it eventually trades like gold, right? This asset that people want to trade in good times and bad. That's my general take on it, the addition that I'll give to you. What are your thoughts on that, right? How do you think Bitcoin monetizes in this universe where gold is still treated as the apex risk off asset, but Bitcoin's monetary properties allow for it to be essentially a better gold?
Yeah, I think Bitcoin is the ultimate risk on asset to make a investment around fiat currency debasement.
Mm.
And so the S&P 500 and Nasdaq I think also act as an important part of their current risk factors in a similar manner. And so I think that there's different risk factors that could make that more true or less true. So if fiat currency debasement is ultimately what's driving risk, then I think that pushes Bitcoin and the S&P and Nasdaq to behave more similarly. If the S&P and Nasdaq were being driven from a pricing perspective more from future earnings because of AI risk or from tariffs,
Mhm.
I think that's when you could see a divergence between the risks to them. And so I think you saw a hinting of that in around Liberation Day, where equities on a risk adjusted basis did worse than Bitcoin. And I think that holds true to that kind of a macro framework where there's different risk factors that have more correlations and less correlations. But I do think that the most important risk factor continues to be the continued debasement of fiat currencies, which would point towards the increasing correlations between Bitcoin and stocks, which makes for a ton of interesting conversations about how you can even think about hedging Bitcoin risk. Like, can the stock market actually be a way to hedge Bitcoin risk where they're more correlated, but if the things that they're less correlated on you view to be more of a bearish factor
Mm.
for public equities than a positive factor, then you could argue that hedging Bitcoin risk through traditional equities is actually a Bitcoin maximalist way to think about some downside protection around Bitcoin into the future. That is not in contrast with what you're saying. So, anyways, I do generally agree with that framework. I guess maybe one other point is, that chart on global central banks owning more Bitcoin than US Treasuries. I think that Balaji posted yesterday. I think go back to thinking about a framework that was true in the quantitative easing era for the Federal Reserve, where they were directly buying US Treasuries, they were directly buying agency mortgages. But what did the best during that time frame, even though the agency mortgages compressed versus US Treasuries, interest rates around US Treasuries went down, was actually things further out the risk spectrum. So corporate credit, high yield, things that had a higher beta tended to be the best performers, even though the non-economic buyer at scale was not buying those things directly. So I think you ultimately will see a similar thing with gold, where gold is currently this in 2025 leading Bitcoin. But I think Bitcoin is ultimately a better pure play on the type of risk that is trying to be diversified and being diversified through gold. And there's a technical dynamic of, gold ripping out after not breaking an all-time high for a long time. And, and kind of a euphoria around that. But ultimately, it goes into what I think is one of the most, if not the most important charts, which is Bitcoin versus gold, and seeing that ultimately break out to an all-time high. And I do think it does. And that I think is the moment that I think, we benefit the most from.
Well said. So, speaking of being a contrarian investor, or at the very least a skeptical investor who arrives at their own conclusions, you know, the reality of Bitcoin versus the way the market is pricing it, in my mind, is the biggest informational asymmetry of the 21st century in markets. So wonderfully put. The last thing I'll ask you, we kind of started the show with quantitative easing. We brought it back to it toward the end. We're reaching a point, where we're spending, gosh, well in excess of $1 trillion every 50 days or 60 days. Government shutdown pending. It seems to be a quarterly occasion on this point, or a biannual occasion at this point. And you have that against the backdrop, as we discussed, of foreign entities reducing their U.S. Treasury holdings as a percentage of their FX reserves. Amidst that backdrop, should a black swan event occur, what do you think the MO would be for the Federal Reserve to fund the U.S. government? We obviously saw quantitative easing in 2008. In 2020, we saw that happen essentially again overnight. In 2023, amidst the backdrop of a very small, very truncated regional bank crisis, the Fed once again stepped in with a brand new acronym facility. Should this happen again, do you expect more direct monetization from the Federal Reserve? Because, in 2008, this wasn't necessarily a big dynamic at play where foreign central banks were reducing their U.S. Treasury holdings. But now, amidst these tariffs and what you've seen since Liberation Day, that is now a dynamic at play. And so the question becomes, like, what does the Fed do? Do you think its response even more direct, even larger in the event of, some kind of catastrophic failure in the U.S. economy? And if so, what would that look like for Bitcoin? How would Bitcoin react?
Yeah, they will take every single effort that they possibly can to try to ensure that the treasury markets function. And that's not an explicit mandate of the Fed, controlling inflation, controlling jobs are, but I think this is a clear mandate, and probably the mandate that is ultimately the one that they're most concerned about, and they're willing to take the most drastic actions to try to make succeed. I would say ensure it succeeds, because I think at some point it won't work. And I think that is the black swan, is not that something happens and the Fed comes in with your new acronym and buys. The black swan is when they do that and it no longer works and the market continues to not function. And I think these are things that Bitcoin will do extremely well in. I hope for our country don't occur, but I also don't see a way for them to not occur when you look at the debt crisis and no one politically taking this seriously at all, that it's kind of a train that ultimately hits a cliff and no one knows where the cliff will happen. But I think everybody kind of sees where this is going. Ultimately, it's one of those things where, probably when that happens, when crises happen, typically correlations go to one for, a short period of time. which gets into the importance of asset liability matching, right? Like you can't be in a scenario where it's not inconceivable that when this happens, Bitcoin trades off 50% initially. And then within 2, 3, 4 months is at new all-time highs and ripping higher. That is historically when you look at black swan events like a COVID as an example,
Mhm.
what happens? In crises, people sell what they can sell. They sell what's liquid. And Bitcoin is a liquid 24/7 market with risk that people won't immediately understand. And so I think we are moving towards this cliff. I think my best guess will be Bitcoin will actually trade off when this such an event happens. But companies that have leverage that is with asset liability matching will be the only companies. There will be no new door to get into to put on that risk at that time. Like there's no liquidity in those
Mm.
situations. And so it'll be those companies that have already built the plane that'll ultimately benefit and be able to ride out a very short term, you know, decrease in the markets. But I guess the last thing I'll close on that is that that may not be for 10, 15, 20, 25 years, or it could be next year. Like we just don't know. But what I do have firm belief in is that the carry trade will still work in the meantime.
Perfect. Matt Cole, thank you so much for coming on. You've been so generous with your time and valuable insights on Bitcoin treasury companies and the broader market. I particularly like talking about the broader market. Any parting message to the listeners? And if people want to learn more about Strive and what you're doing, where can they go to learn more?
Yeah, I guess that the parting message, if it wasn't clear, is that I don't think this bull market for Bitcoin has started yet. It starts when it breaks out to an all-time high versus gold. And you can follow me on X at Cole Macro.
Fantastic. Thank you for coming on, Matt.
Thanks for having me. It's fun.